As Britain moves toward a deep recession, the cost of living crisis will put many communities into debt during, no doubt, a festive season. If debts become a norm, what role does alternative lending and debt recovery play in Britain today? An average household credit card debt in the UK in 2022, if you include mortgages, we're talking about over 63,000 per household. Welcome to Debt Talk podcast with me as your Dr. Debt, Ripon Ray. The topic I'm to speak about with my panel members in this episode is alternative lending and debt recovery during Christmas. To help me navigate today's subject and provide you with tips in this month's episode, I have Helen Baron, Chair of London Capital Credit Union, who's also a professional psychologist, Peter Gent, Director of COEO UK, one of Britain's leading debt collections companies. Finally, David Bembo, Operations Manager of England Illegal Money Lending Team. He also has a national campaign, Stop Loan Sharks. For those who are listening to Debt Talk and you want to share your personal experience on Debt Talk, or maybe you want to listen to a subject that is of your interest, you can get in touch with me directly on Twitter at yourdrdebt or email me ripon.ray@yourdrdebt.com. Otherwise, my website, yourdrdebt.com. Let me begin this month's conversation with Helen Baron. Helen, you have seen a wave of change in the lending and borrowing market in a decade. What are the major types of lending products are out there right now?
Hi, Ripon. Well, obviously, I have to mention credit unions because they're growing and providing an affordable loans from a few hundred to several £1,000s. Perhaps the easiest way that many people borrow is just from the main banks, the high street. You can get loans and mortgages. Those are all lending products. But also when you go into overdraft on your account, that's also borrowing. And it can turn out to be quite an expensive way to borrow. So do watch that. And then we've had credit cards for years. A lot of people have those, and they're very useful just as a payment card when you're buying something. It's an easy way to hand over your cash, but you can pay a lot of interest on that if you're not paying off everything you've spent within the month. So you can be taking out quite a lot of borrowing without really thinking about it on a credit card. Something that is been coming into the market in the last few years is buy now, pay later. We've maybe had things like that under different names for a while. When I was young, it used to be called buying something on the never never. But it's not that you never pay it back. And these buy now, pay later companies, I mean, you see them when you check out when you're shopping on the internet and they say, do you want to pay in several installments? Companies like Klarna, they allow you to make several payments. And that can be a way of getting interest-free credit, but the payment schedules are often quite quick. You need to pay the money back. Sometimes there's several payments in a month, and if you only get your salary once a month, that's quite hard. So do look at the payment schedule. And although the credit is usually free on those, there are late fees. So if you miss a payment, then they can start charging you, and that can quickly add up and become very expensive. And they also tempt you to buy things that you maybe can't afford. So do watch those. And then there are lots of commercial loan companies. Those are the ones that come up when you search for a loan on the internet, and you'll get hundreds of them offering you cheap credit. They say not cheap credit at all. They're typically very expensive. They can be very expensive. They can charge interest in the hundreds of percent and even in the thousands of percent. We used to have the payday lenders, and they charged an awful lot of money. Well, eventually, after a lot of people lost a lot of money with them, they were regulated to some extent, but commercial loan companies can still charge you eye-watering amounts to borrow money. And beyond that, there are the illegal lenders, and I'm sure David will talk more about the dangers of borrowing from them and how they can how they represent themselves. So those, I think, are the main sources of borrowing.
Broadening it a bit in terms of alternative lending, I suppose, what chunk of the market is alternative lending is filling the gap?
Well, I know the credit union sector, and credit unions in the UK have over 2 million members. So that's pretty much 1 in 3 of the adult population of members of credit unions. There are nearly 400 credit unions. And the sort of total loan book of all the credit unions is £2 billion. So we're quite a substantial chunk of that market.
Let's say the types of product a credit union would offer, in what way the product or products be different from mainstream lenders?
So the main difference that credit unions have is that we are there for our members, the people that use our services. We talk about them as members. You join a credit union. And so we think about what their needs are. We're a not-for-profit organization. We need to charge interest because we need to cover our costs as an organization, but we're not interested in making as much money as possible out of people. So we can offer affordable loans, and we can offer them in a way that is most suitable for our members. If our members tell us they want that certain things work for them, then that's where we'll go. So we offer very flexible both loans and saving products. And I think if you want a loan of a few £100s, a credit union is pretty much the only place where you're going to get that without being charged an arm and a leg.
I mean, you mentioned about members, but how do someone become a member of a credit union?
So anyone can join a credit union if they meet what's called the common bond of a credit union. That's the government legislation that allows credit unions to operate. Says that their members need to have something in common. So that thing in common could be living in the same area. So for London Capital Credit Union, we have as members people who live in certain areas of London in the boroughs of Islington, Haringey, Enfield, Barnet, Camden, Hackney, and several other boroughs. I won't mention them all, otherwise this might go on for a while. You can also join us if you're a member of the Co-op in London, or if you're a member of the Unison or Unite trade unions in the area. Other credit unions might be for specific occupations. So, for instance, there's a credit union that serves the armed services, or one that serves communication workers or police forces. So that's the kind of common bond. If you live in our area, then you just go on our website and you can you can join. If you're not sure, there's a website called Find Your Credit Union, and that will then you can put in where you live and what occupation you have, and it will tell you which credit unions you're eligible to join. So everybody in the UK is eligible to join at least one credit union, and often several.
Many individuals, including many of your members, may be finding themselves in tough times. What sort of help, or how do you identify vulnerable members during current times within your credit union?
Well, we serve our members and we are alert to our members' needs. So we will always try and provide a service in the way that suits our member. As I say, we're a not-for-profit organisation that is serving members, so we do what they need. So if a member tells us, for instance, that they want a loan because they're paying for a funeral, well, clearly we know that that person is maybe going through something difficult, and we can take that into account. If a member tells us that they have certain vulnerabilities, then our staff will know what to do. It's something that we've always done. I mean, very recently, the regulator has required all financial institutions to take account of people's vulnerabilities. But for us, it's not a tick box exercise. It's just the way we relate to people. If we are, so for instance, if a member comes to us for a loan and we can see that they're paying back a lot of expensive debt and we can save the money, then we might say to them, why don't we lend you more money? You pay off that expensive debt and we can reduce your monthly payment and get you out of debt. So that's just the way that we do business.
Thank you, Helen. Let me move to Peter Gent, to the discussion. Peter, Helen covered aspects of, I guess, lending. How does a debt collection company wins business from mainstream lenders or even a credit union when it comes to, I suppose, buying and selling bad debt?
Yeah, so we've got two products really. We're in a debt recovery business, and then we've recently obtained a license to purchase debt. But it tends to be the market itself is quite insular. So we very much it's about the network. So you tend to know the right people at the right institutions to speak to. The major institutions, the big banks and the traditional banks, will tend to tender for the work. So every 2 or 3 years, they will say, "Look, we're now looking for a new panel of debt recovery businesses or legal companies to work with," and then we have to tender for the work, explain what we do, how we operate slightly differently from our competition, and show the results really to try and win the work. And with the alternative lenders, it's a little bit more about the power of the network. Who do we know? And we've got a good reputation, especially in fintech businesses. Because we have a very much a digital approach to recovery. So what we tend to look at is people who are a little bit like, so lenders are a bit like us. So and going back to Helen's talking about the credit unions, a lot of the credit unions now have a slightly more digital approach than they used to do. So it's like looking for companies that are a little bit like us, where we can we're a good fit for them. But really, it's often as well, Ripon, it's just down to sales. Being good at it and knowing the right people to speak to, and we've been doing it a long time, so we've got a good reputation as well. So that's key.
I mean, in terms of reputation that you mentioned, and also how so different strategies companies use, and you talked about looking at tech companies, but in terms of types of products that you, I suppose, hold in your balance sheet, what kind of products are we talking about?
Yeah, so generally for lenders, we do arrears management, so early arrears. So if somebody's missed a payment on a loan or on a repayment on a buy now pay later, we'll do an arrears process for them, which is really early. Tends to be lower balances because it's not the full loan balance isn't due. So we'll either do that confidentially, so we do it as what we call white label. So in effect, we're acting in the customer's name, in our client's name. We brand everything as a client, or we do it in our name, maybe probably 14 days after the client has tried to collect the debt themselves. And we do direct debit rehabilitation, just to try and get the loan back on track. So whatever payments been missed, we'll get involved in that. We also do defaults. So if the customer's missed maybe 3 or 4 payments, at that point, the NOSIs will be issued and the notice of defaults will be issued. And at that point, then we'll be given we'll get the debt in full, so that the entire loan will be due at that point. And then that's what we'd have to collect. We've also got a legal service. So we do a lot of scoring to make sure that we don't take people to court who can't afford it. So what you're looking for is the people who traditionally you can't pay and you won't pay. We want the won't pays into legal, not the can't pays. So anybody who's vulnerable or we suspect has got financial difficulty, we don't want to be taking those sort of people to court because it's not a good experience for them, and ultimately it's not going to result in payment. So we've got that sort of side of it. So we really work the whole debt cycle from really early arrears right through to legal, and then if needed, we'll use an enforcement company to get involved in it. But the idea is you start with a lot of arrears, and then we end up with very little going to legal, and then even less going to enforcement if we're doing our job right.
So once you've obtained the account from the bulk by the debtor's details, and you've got the accounts in front of you, so what would actually happen with interest and charges that might be owed contractually?
It all depends on the client. So not everybody does it the same way. But if it's arrears, some of our clients will continue to charge interest. So we would get a balance from them on day one, and then day two the balance would change because the interest had been applied. Day three the balance would change. So every day we get a balance adjustment from them. So our system will automatically update the balance. Once it gets to the default stage, wherever the client decides that that stage is going to click in, the balance then crystallizes. So no more interest will be added onto it. We'll just get a singular balance to collect. So, but it's entirely up to the creditor or our client of how they want to proceed. We've got some clients who will say once it's been passed to a third party, interest stops. That's our policy. We've got other clients who say no, we're going to continue to charge it. It's entirely up to them. And additionally, traditionally, well, in probably 10 years ago, it was relatively common to add on the collection fees to a debt. It wasn't uncommon to do that. That just doesn't happen anymore. So with the FCA regulations kicking in and things like that. So even historically, if it had been in a contract to say that was allowed, it's very, very rare that it'd ever be the case that we add on the fees. So the creditor basically pays.
So basically, there's been a change from previously, where now you do recognize that it's not really worth accumulating debts and accumulating arrears, but there is a stop to how much you can get.
Yeah, so some clients would have it at arrear stage and continue to collect on it at the interest, and then at a certain point they stop. Some clients decide not to do that. It's entirely up to them.
Earlier on, you mentioned about legal and enforcement.
Yeah.
Now, a lot of people I've spoken to, there seem to be a confusion between debt collection and enforcement. Now, you've done both. Could you clarify for us, please?
Yeah, well, it's really simple. So debt collection's earlier in the process, and it tends to be before any legal action's been taken. So as a rule, earlier in the process, you'd have a debt recovery company or a debt collection company involved. And then if they're not able to recover the debt or get an arrangement or make contact with the customer, at that point then it'd be passed to the legal. And then once it's been through the legal process and the judgments have been issued or whatever they need to do, if it's council tax, then they'd issue liability orders. It's at that point then enforcement would kick in. So enforcement is really at the end, and debt recovery is more at the start or the middle of the process.
Offline, we've spoken about you moving away from, I guess, enforcement to debt collection. What was your personal reason for doing that?
Yeah, well, there's a couple of things that COEO UK were formerly called Credit Resource Solutions, or CRS, and I worked here for 5 years, 7 or 8 years ago. So, and I've stayed really close to the original directors and the owners of the business. And I was offered the opportunity to return as we were going through the change into our new ownership. And the other clear reason was we were in COVID, and enforcement. I was the sales director at an enforcement business, and you can't do enforcement when COVID was on. So basically, I didn't have a job. Ultimately, I didn't really have a job. So it was a pragmatic approach that I needed to get back into doing something, and took this opportunity. That was the reason.
Moving forward, Peter, what challenges do you think debt collection companies or recovery companies may experience during the cost of living crisis? Yeah,
I think what you're going to find that there's lots of worry and about people being able to pay the bills, and we accept that the fuel, the cost of energy is going through the roof. I think what we're going to find is that we're going to have longer payment arrangements for people. So people are going to say, look, I can't pay this debt, but I can pay it. Instead of over 6 months, it might be over 12 months or over 18 months. And you'll have more people entering into arrangements than previously. So generally, people who want to engage with us will either pay the debt or they'll set an arrangement. I think there'll be less people paying in full now and more people spreading the arrangements across. And I think you're also going to have a different demographic entering into debt. So people who've never had this situation before, suddenly the mortgages have increased, their energy costs have increased. They're going to have a situation where they have to engage with a debt recovery business. But we also know that, and it's a real thing with me, that despite the fact that there's a cost of living crisis and we know what we're going through, people who want to engage will engage with us. So if somebody wants to engage with us, we will engage accordingly, go through the I&E forms with them, set the right arrangements. If they need to go to a third, part of the third sector, to a debt charity and refer to that, we can do that. The people who don't want to engage would not have engaged whether there's a cost of living crisis or not. They just decided we're going to ignore it. So the challenge for us is to get people to engage with us. That we're not, we will set reasonable arrangements up. We'll try and find the best solution for them and the right outcome. But I just think it'll be more arrangements and longer arrangements over the next 12 months, I think.
I mean, I'm not sure you've been following, Peter, but there has been a change within, I suppose, the enforcement sector due to the fact that we now have Enforcement Conduct Board.
Yeah.
What do you think is the purpose for setting such a board, and is it fit for purpose?
I think, and then I guess it'll be slightly controversial now, Ripon. I think it was a bit political. So having worked in the enforcement world, I know enforcement officers to become an enforcement officer, and I mean a legitimate one, you have to get a license or a ticket from the court. So if somebody's not following the rules or not doing what they should be doing, they have that license taken away from them by the magistrate's court, and then they're unable to work. So in my experience with enforcement officers was that they were very, very compliant and would never take it, despite the likes of me saying to them, "Oh, go and try again," because the client needs the money back. They would they'd be really, really compliant. So I think there's a bit of politics going there. But I do think that, especially in the public sector, there's been traditionally the process has been try and collect it. If it doesn't work, send it to an enforcement officer. And I think there's got to be a bit more thought to this, that actually there's other ways to do this, like using maybe using a debt recovery business to set arrangements up. And the other thing I think will be critical for the experience for people who are in debt is they're looking maybe potentially privatising it. So as opposed to using the court bailiffs who are very stretched, have too much work to do. So in a case would be sat with enforcement, it could be sat there for 12 months before anything happens. So that's a stress on the customer, basically, on the debtor. And I think the fact that it gets privatised might speed the whole process up and just make it a little bit smoother. So I think that'll help as well. So I think the two things going together, the new regulations and the fact it might be privatised, will help, I think.
I mean, what we could do in the future, we can talk about both sides of the story, and also perhaps listen from the point of view of the Enforcement Conduct Board, to get kind of their point of view heard as to whether they're fit for purpose or not. But thank you, Peter. Let me bring David into the conversation and I suppose explore recovery enforcement a bit more. So far, David, we've been speaking about, no doubt, mostly around lending, recovery, and aspects of, I suppose, enforcement from Peter's point of view. But what is a non-regulated activity from your point of view, and in what way does the legal, I suppose, lending team fit in?
Okay, so we're the illegal money lending team. Just to explain a bit about us, because people might not be aware, we're a national team that deals with illegal money lenders in England. There's also a team that works out of Scotland and Wales. The team consists of specialist investigators that only deal with loan sharks. So if incidents are reported to the police or partner agencies, those reports will be passed to us. Again, a lot of people don't realise the scale of the problem, because loan sharks tend to operate underneath the radar within communities. But it is a real problem. There was a report published earlier on this year by the Centre for Social Justice, who estimated that over 1 million people in England alone used loan sharks. So in terms of what actually it is, very simply, it's where an individual will lend money as a business without correct permission given to them by the Financial Conduct Authority, the FCA. And the reason for this is the FCA will make checks on individuals to ensure that they're a proper fit person to run a business. and that person will operate within regulatory guidelines, such as setting out agreements, so it's clear how much you're borrowing, how much interest you're going to pay, how long you'll be paying it for, cooling off periods, etc. And an illegal money lender or a loan shark doesn't have this because, quite simply, they don't want to be regulated. They don't want to be told who they can lend money to. And more importantly, they don't want to be told how they go about getting that money back.
Data that I've seen from the illegal lending team, which talks about at least 50% of debtors assume that illegal lenders are their friend. What does that actually mean, their friend?
Loan sharks are very clever. They do appear to be friendly. They'll be very nice to you, and they'll come across as appearing to help you. And they will remain like this until you stop paying them or you miss a payment. And that's when they change. One of our victims likened it to a Jekyll and Hyde character, where the loan shark would change in an instant from being a friendly person to an evil person. We've also had a judge, in summing up sentencing of a loan shark, who said that the impact upon the victim was like a murdering of their soul.
The impact of the victim is murdering the soul.
We have the powers to investigate loan sharks. We have powers to obtain search warrants at their addresses. We have seconded police detectives on our team, so they'll arrest the loan sharks. We'll seize loan sharks' money or any documents and paperwork at their addresses. And we have a specialised legal team that deals with the court proceedings and prosecutions. Once we've convicted a loan shark, then we'll utilise powers under the Proceeds of Crime Act to recover any assets that they have had through criminal benefits.
We've looked at in a sense of criminal activities, and I suspect we're talking about prosecutions, as opposed to civil matter, which earlier on Peter mentioned, whereby you take a debtor to a county court, a legal process, unless of course we're talking about, let's say, court fines or council tax. But looking at it from the perspective of an individual who borrowed and is at risk, how would you support that individual throughout the, I suppose, criminal process?
Okay, so as I say, the impact on our victims can be absolutely massive. I mean, we've had victims that have borrowed £250 so that they can purchase a car, so they can get to work, and have ended up paying £90,000 back. We've had loan sharks that have been convicted that have been giving out loans with APR levels of 4.5 million%. So within our team, we've got a team of support workers as part of our department known as liaison officers, and they're located all around the country. And they provide bespoke one-to-one support to all of our victims. So when a victim engages with us, these officers will visit them. They'll conduct risk and needs assessments with them. If the risk is very severe, then we may look at rehousing that particular person. But there's other support there that's provided, so help with finances, help with debt, making sure that they're claiming the correct type of benefits that they're entitled to, as well as making sort of partnership referrals as well. And that support is with the victims all the way through the journey with us, from the day that they first reported until the end of the prosecution case.
Thank you, David. It's no doubt wonderful to hear from all three of you in terms of your experience and knowledge on alternative lending and debt recovery. The subject that I've been covering so far with my panelists has been alternative lending and debt recovery during Christmas. To give a positive twist to this podcast, let me ask my panelists what tips they would give to my listeners when it comes to dealing with the cost of living crisis. So let me start with Helen from London Capital Credit Union.
Hi there. I suppose my top tip would be find your local credit union and join that, because our services, both having access to good value loans and the savings that we encourage, you're going to do better. But if I was outside the credit union, I would say just be very wary of somebody that's offering you a simple solution to a debt problem, because not that there aren't solutions to problems, but they aren't simple. You need to think about them and they need working at. So if somebody comes to you and wants to sell you, for instance, at the moment, there's loads of people trying to sell individual voluntary agreements, IVAs, and they are often interested in the money they can make off the back of that and not in sorting out your debt problem. We have a lot of members who've been encouraged to take out an IVA, and actually it hasn't helped. It hasn't helped them. So if you are going to get advice, go to a reputable organisation like Citizens Advice or Step Change to get your advice. Somebody that's out there commercially saying they're going to solve your problem simply almost certainly isn't.
Let me move to Peter, Director of COEO UK. What tip would you give?
I think it's for me. It's just to make sure if you do get in a situation with debt, just please engage. The worst thing you can do is just ignore it. So if you engage with us, we can find a solution. That's all I would say. Just don't ignore it. There's lots of horror stories about debt recovery and enforcement, but I've worked in this industry for a long time, and generally it's not true. So if you engage, we can find a solution. We have a tagline here about let's get it sorted, and if getting it sorted means referring somebody to a debt charity, then that's what we'll do. But just please engage.
And finally, to David Benbow, Operations Manager of England Illegal Money Lending Team.
Yeah, my tip is simply do not borrow from loan sharks. Look for the signs. So look where you're meeting this person. Have you met them in a pub or at a work canteen or outside the school? If they're offering you money, is there any paperwork there? Are they asking for any securities from you, copies of your passport or your driving license, or taking jewellery off you as some sort of security? Check the FCA register to see if they are licensed or not. And finally, if you do have any concerns, or you think you may have borrowed from a loan shark, or you know somebody that may have borrowed from a loan shark, contact us. If you just put Stop Loan Sharks into Google, you'll see us. You can contact us there via email, Facebook, Snapchat. And we have a 24-hour hotline that's 0300 555 2222. And that hotline is staffed 24 hours a day by our investigators. It's not a call centre. You'll get put through to one of our staff members, and they can have a chat with you in confidence about any concerns. They can check the FCA register on your behalf for you, and they can give you any advice and support that you may need.
0300 555 2222. Thank you, David. I would like to thank my panelists for giving their precious time on Debtor podcast on alternative lending and debt recovery during Christmas. For my next episode, I'm going to speak about crypto asset gambling and debt during the cost of living crisis. Once again, thank you for listening to Debtor podcast with your host, Ripon Ray.